Palantir's third quarter results are hitting the wire, and let's take a look at where some of these numbers landed. So Palantir reporting third quarter earnings and revenue above expectations, also raised its fourth quarter and full year sales outlook. You're seeing shares up around 4% in after hours trading, revenue coming in at $1.18 billion for the 3 months ending September 30th. That's a 63% increase from the previous year and above the $1.09 billion Wall Street expected. Now, driving that revenue beat was Palantir's business in the U.S. Its revenue from U.S. government contracts jumped 52% to $486 million. That's above the $470 million expected. And the company's U.S. commercial segment saw revenue soar 121% to $397 million. In a letter to shareholders, CEO Alex Karp called Palantir's U.S. commercial business, quote, an absolute juggernaut. Earnings, like we said, exceeded expectations. Adjusted earnings per share of 21 cents was ahead of the 17 cents expected and more than double its EPS of 10 cents a share in the third quarter of 2024. Now, for some background here, Palantir sells its artificial intelligence software to businesses and governments in both the U.S. and abroad. Its tech does everything from supply chain analysis to surveillance and identifying military targets. So the government business has been especially important to this company, and it's something that Wall Street analysts have been looking at closely as the U.S. government continues to not only spend on defense, but also remains shut down. But that did not affect that fourth quarter guidance. Clearly not a factor at this point. We are seeing shares up, again, 4% in after hours trading. Palantir is out with its latest quarterly results, the company topping revenue estimates for the third quarter and raising its revenue guidance for the full year. Here with a closer look at the numbers is Apostrophe Capital Research Chief Market Strategist Corey Johnson. And Corey, across the board here, very strong results. Seems like a pretty stellar quarter. As you parse through this report, what stands out to you most?
So I guess the thing that really jumps out at me, in my model, I had to do a double take when I looked back at my model over the weekend and saw that I was predicting a 99% business increase in their commercial revenue, thinking, is Corey crazy? And then they come out with a 121% increase in commercial revenue. So that was a really dramatic number. And now we don't have the actual hard numbers, I should say. In the press release, they give us percentages. In the presentation, which I have yet to see uploaded onto their site, we'll get some harder numbers about sort of the segment revenues. But they give us the percentages, and we can start to figure out what those numbers are, and they're really strong. It's fantastic growth in a business that was already growing at an incredible rate. So the rate of increase in this business has continued to accelerate. It's a very impressive thing to see, as has the profitability. So incredible profitability from this company. But you don't see the stock moving dramatically because it already moved dramatically. And there is such an intense retail interest in this stock. One wonders how the market is going to react to it when these numbers come out, because the retail sector tends to cheerlead when maybe the professionals tend to take a more measured approach. At least one might think so. Certainly, when the numbers turn bad, the retail flees, and so that was something to be concerned about here. But these are just really strong numbers from Palantir. Yeah,
and a lot of this has to do with the valuation story, right, Corey? I mean, were these results enough to justify the super high valuation? Because we know in the past, Palantir has delivered solid results, yet the stock doesn't do too much considering how high of a multiple it trades at. So how do you view the results versus the valuation here?
I mean, you say it doesn't do too much, but it's up 388% in the last year. So it might.
I mean, directly after the results, but yes, to your point, agreed.
So we're in total agreement as usual. What we can see happening here is they were expected to deliver fantastic results, and they delivered fantastic results. I mean, this stock is insanely expensive by any measure, and you can estimate whatever kind of growth you want and however many years of this kind of growth going forward. But the stock is really priced for the cliche price for perfection. It is priced for this dream of all-encompassing Palantir AI, both in government services and in the U.S. Yet the company has told us that they're not going to sell everything to everyone, and they're going to limit what that audience is. So we shall see. I mean, there's some things I both love and hate at the same moment about Palantir. I love that they're so funny, and they've got this ridiculous merchandise on their website, limited edition T-shirts of Alex Karp's face comically altered, as if his hair isn't comically altered already enough, said with affection. But does that boost a retail presence in the stock who've got cheerleaders, not investors? At the same time, I love the fact that they do their earnings press conference on video. Helps my podcast, my video podcast on YouTube. They're on YouTube. I'm on YouTube. Great. Everybody can watch what Alex Karp and the guys look like. And there's no one more entertaining at a conference call, I think, than Alex Karp. But one, again, wonders if the company might want to temper some of this expectation around the equity share price as opposed to the really exciting business.
Yeah, and look, now, Corey, we're in the red. We were up 4%. Now we're pretty much trading flat to the downside here.
Yeah.
But one thing that I realized is they didn't really mention their international business. And I'm curious if that comes in ahead of projections, because obviously the U.S. commercial side is crushing it. That's doing really well. But internationally, it's struggled. The commercial business abroad has fallen below expectations over the past 2 quarters. So how important is that international segment when you think about the future of Palantir's growth?
Well, and again, it gets to where could this? I'm looking at the press release to see if they update the presentation here on my other screen, and they have yet to. They'll do it surely momentarily, but they have told us they're not going to sell to everyone. They have told us they're going to sell to the U.S. and their allies. They announced an important deal into the U.K. recently, but we'll see what they sell and how they limit what they sell and what their products can do. I mean, Palantir is very excited about all the possibilities they have to strengthen America and America's defense and offense. Not everyone's as excited about that. We see that when we look at what's happening with ICE. That is this the mining of data, or is it the excavation of secrets? And we wonder how far that we want that to go, and how many successive U.S. governments are going to want to have unfettered access to personal data of individuals and make a big business out of that for Palantir. So there may be limits to their business that we don't see right now. But this quarter, right now, the numbers are just spectacular.
And Corey, real quickly here, some analysts have flagged ethics as a growing concern for retail investors since Palantir has been protested for its deals with ICE and the Israeli military. Is that at all a risk for the stock?
I think capitalism is winning over ethical concerns right now. I don't know that the retail investors are very concerned with people who are different than them and might suffer from some of the effects of these technologies. But I think it's someone everyone should think about and wonder how they want to invest and how they want to make money.
All right, Corey, thanks so much. Appreciate it as always.
Thank you.
What we're seeing on Palantir, how concerned are you about it?
Listen, I'm not necessarily concerned because we've been talking about this for a while. Valuations have been stretched, and the longer the market kept going up, then the more stretched they became. Everyone's been talking about it. We all know it. This shouldn't really be a surprise. I'm just a little bit surprised that Palantir completely crushed it on every metric, and the first reaction was to sell it, right? As they now bring up all these, well, suddenly it's overvalued, and suddenly we have to take a break, and maybe it can't live up to the expectations and all that stuff. It's all, to me, it's all noise. While I think a pullback is healthy, I don't think this is the beginning of the end at all. I think the AI story and the Palantir story and, NVIDIA and the rest of them is very much alive and well. And on any pullback, I would view it as an opportunity.
So you're looking at this Palantir pullback, Kenny, as an opportunity. Look, it makes sense. This company is crushing it. And let's put even trying to compare it to what the growth rates NVIDIA is seeing, I don't see a lot of companies putting out these Palantir-type results. I mean, blew it out of the water fundamentally, blew it out of the water in terms of guidance. I like the conference call. I like Alex Karp. I mean, I like how fired up he is. I dig it all.
Yeah, on every metric, they blew it out of the water. But I just think that the market is finally sitting there scratching its head because, look, Brian, you've seen the divergence between the S&P and the equal weight S&P over the last couple of weeks where the S&P keeps getting dragged higher by tech, but the equal weight S&P now is suddenly starting to churn and move a little bit lower. So nobody should be surprised that we're suddenly seeing kind of the market take a breath again, which I think is very, very helpful. But on a day like today, I'm not necessarily going to jump into Palantir yet, because when you get news like this and a reaction like this, I always tend to let it settle down probably 2 days. I'm going to watch the action and see what happens, but I'm probably going to watch it for a couple of days because that's typically how my mind works. I let the news come out, I let the market digest it, and then I jump in.
Inez, I'll tell you how my day started real quick. I wake up very early this morning, had a cup of coffee, I go to our platform, and I see Wall Street CEOs warning about a 10% or more pullback in stocks. I always hate when these Wall Street CEOs come out and say, hey, it's healthy if stocks pull back. Well, no, maybe not, because you're losing money.
No, but certainly, look, this is Wall Street has been talking about the potential of a bubble. This is what has been talked about over the last month, really, as you see these valuations going higher and higher. And you've had even strong reports like Palantir's report, for example, and you're still seeing a pullback in the stock. Uber as well had a strong report, but you're still seeing a pullback. So perhaps this is one of those sort of pause moments. We'll see if this follows through or if investors come in and buy the dip.
Inez, what, you're telling me that Palantir valued at about 213 times forward earnings? I mean, that's not cheap, right? That's not a cheap multiple.
It's not cheap, but I mean, if you take a look at their commercial business, it was up 121% year over year. I mean, in every segment, they just sort of blew it out of the water. And what's really interesting about the stock is that it's so supported by retail investors. More than like 45% of the stock from retail investors. And Alex Karp also talks to the retail investors, so to speak. I mean, even when he says he loves to turn on the TV and look at analysts saying why another company is better than his, it's because they didn't make money off of it. So certainly, look, this stock has had a massive run. It was up 175% year to date before the earnings release came out. And so perhaps this is some profit taking.
Concerns, of course, have been weighing on these Palantir shares, despite the company topping third quarter estimates and raising its full year guidance. Joining me now is Gil Luria, D.A. Davidson, head of technology research. And obviously, Gil, there are two things going on here. There is the fundamental story of the company, and then there's the stock story of the company. On a fundamental basis, in these numbers, was there anything not to like?
No, the results were spectacular. They exceeded any expectations anybody could have. This is a company that's more than a $4 billion run rate, growing 63%. It's more than doubling its commercial business. And these aren't little deals. They have some customers that spend as much as 9 figures on Palantir software. So companies are lining up to use Palantir in order to achieve their AI goals. The government business grew 50%. The government's still leaning more and more on Palantir to achieve its own mission critical goals. The stock is down today. That has nothing to do with the fundamentals from last night.
Okay, so what does it have to do then? Is it just a valuation question and this was sort of a sell the news kind of situation?
More likely. I actually think it has nothing to do with Palantir. To your point earlier, this is more about a risk-off vibe today, nothing more than that. You can see a lot of the higher multiple, more AI-exposed companies, stocks being down today. Again, I can't imagine anybody expected Palantir to do better than they did last night.
I mean, but at the same time, what, Palantir's price to sales are something like 85, the highest in the S&P 500. Even if this company is fantastic, does it deserve the valuation, the multiple that it has?
You know, that's the tough question because the both on the price to sales, price to earnings, EV to cash flow, there's no way to justify Palantir's valuation. It is completely divorced from fundamentals and from any other valuation of any other company, which is understandable because they're doing so much better than any other company. They are by far the best software company, but the valuation, it's hard to justify. It's hard to tie it to a cash flow, a discounted cash flow. It really is. Investors that buy Palantir are buying it because they expect the growth to continue for the foreseeable future and beyond. It's a very individual investor-based stock, and so it's very hard to argue should it be trading at 80 times EV to cash flow, EV to sales, at 100 times EV to sales, at 60 times. It's very hard to argue. These are all arbitrary numbers, and hence the challenge, and hence a day like today where, again, the results couldn't have been better, and the stock is down.
Well, okay, so Gil, let me ask it this way then. What is the total addressable market for a company like Palantir? And is there anyone really competing with them directly in what they do?
So there is no ceiling for Palantir anytime soon. Just to give you proportion, again, they're more than $4 billion run rate. Adobe's $20 billion run rate. Salesforce, $40 billion. Oracle, $50 billion. There's nothing limiting Palantir's growth. That's part of the excitement. That's part of how investors are justifying this very high multiple. And then in terms of competition, everybody's trying to do what Palantir is doing, which is help companies get to their AI goals, and nobody is succeeding as well. And it's not an accident. Palantir is an overnight success story, 20 years in the making. They do some things extraordinarily well. They help companies and government agencies collect disparate data sources, combine them so you can use AI without compromising the privacy and confidentiality of those data sources. They give companies the soup to nuts service in terms of all the software components, all the services components, instead of those companies having to cobble that together from different software companies and third-party consulting and internal IT. Those are two very unique capabilities that really nobody else is doing and are actually kind of hard to replicate. That's why Palantir is doing so much better than anybody else. And again, the sky's the limit because at their size, they can continue to grow at these rates for many years.
So, Gil, you've got a neutral rating on this stock. And is it just because of what you said earlier that it's hard to, like, it doesn't fit neatly into the financial models that folks in your business traditionally use? Is that the issue?
That is the issue. I'm just a curmudgeonly old sell-sider, and I feel like multiples matter and have to make sense and at least be anchored to other multiples for other companies or historical multiples. And as we said, with Palantir, that's not the case. The multiple is so high that it really is divorced from fundamentals. But again, great company with a great mission doing phenomenally well.
Gil, I do want to ask you more broadly about the risk-off movement that we're seeing today. As I mentioned, you had the Michael Burry filing, right, about the put options on Palantir, as well as some charts that he posted on X. Is there a bigger question to ask, and where do you stand on that bigger question of where tech valuations are right now? You've heard it all. We've talked about it before, the circularity of the spending with OpenAI at the center. How are you thinking about it right now?
There's two categories. There's the real companies that are doing real work and are actually not trading at a very high multiple. Microsoft, Amazon, Google, and NVIDIA. They are building an AI infrastructure, and they all told us last week that they saw a positive inflection point in AI demand. There is increasing need for compute, and those companies are responsibly building out that compute. There's a whole other category of bad behavior, using debt to finance, very expensive debt to finance data center build out, related party transactions where you're investing in your customer and then helping them borrow even more money to buy more of your product. Both things are happening simultaneously. But again, I point out Microsoft, NVIDIA, Meta, Google, all trading, Amazon, all trading at less than 30 times earnings. Those are attractive valuations for companies that have seen a positive inflection point. As you start getting into this more speculative bets, your Oracle, your CoreWeave, your Oklo, those are extraordinary. Even your AMD and Broadcom, those are extraordinarily expensive on what is much more speculative, much more reliant on the ability to raise debt capital, expensive debt capital that may or may not be available for very long. So those two things are coexisting. It's important to focus on the real companies doing the real build out based on real demand.
Dan Howley, we're going to start with you. And on these Palantir numbers, which look pretty good, it seemed like.
Yeah, they beat on the top and bottom line. They beat on the expectations for Q4. They seemingly, as you said, had a great quarter, and yet we could see that in the pre-market, shares are down more than 8%, and it really has to do kind of, as you said, with these sky-high valuations. We have Wall Street analysts basically kind of balking at what the shares are trading at this point. This is a stock that's a favorite among retail investors. It's been shooting through the roof, riding kind of the AI wave that essentially all of the tech industry has been riding. They sell, obviously, their software to businesses as well as the government. It uses AI. They signed a deal with NVIDIA to capture more chips to be able to speed up the use of their software. And so at this point, it seems as though it's to do with the valuation more generally. And CEO Alex Karp had this to say about the valuations. He said the ascent has confounded most financial analysts and the chattering class, whose frame of reference did not quite anticipate a company of this size and scale growing at such a ferocious and unrelenting rate. He said some of our detractors have been left in a kind of deranged and self-destructive befuddlement. And so that's kind of his shot at the Wall Street analysts who say this stock is trading at levels that just don't kind of make sense when you compare them to what the other, or what its larger big tech competitors are trading at, the likes of Microsoft and Google and NVIDIA. Their PEs are lower than what Palantir is at. So obviously there's these kind of dueling takes where the company, obviously says, look, we're gonna continue to crush, continue to move forward, and analysts are saying, well, let's just hold our horses for a minute. Maybe this price is a little high for what the company's doing.
I mean, that said, the numbers were pretty impressive. If you look at the year-over-year gains, you read some of his quotes from the call. Dan, I'm going to read you my favorite. He said, by any normal or even reasonable standard, these are not normal results. These are not even strong results. These are arguably the best results that any software company has ever delivered. No exaggeration there, I guess. I don't know, but I mean, to be fair, the sales gains year over year were big.
Sure, the sales gains were huge. He also, for some reason, quotes poets and filmmakers. Really likes to write a lot in his letters, I guess. But yes, this is, a company that is clearly doing very well. They managed to score these big contracts. Obviously, the U.S. is its largest region as far as revenue goes. They have these contracts, and they've taken heat for working with different government organizations, including ICE. They have a contract with the IRS. They have one with the military. They also, however, work with businesses, and so they work with logistics. This is a company that, as mysterious as it may sound, basically takes data and helps make it more usable. So it'll pull data from disparate sources and help a company understand how to better take advantage of it, or government entity. And so that's really the thrust of what Palantir does. It's, the name is obviously a reference to a Lord of the Rings object that, allows you to see places far away. This isn't a, mystical company by any stretch of the imagination. It's just taking data and lining it up in a way that makes more sense. And so that is helpful for organizations that are massive, such as, commercial offerings, as well as the likes of the US government. And so that's where they really are shining, and they're just doing something that other companies simply aren't doing as well.
Names like AMD and Qualcomm are set to report as soon as this afternoon. Investors balancing what's been a positive earnings season so far against growing concerns of a potential AI bubble. That, again, has weighed on stocks today. Here with a look at what to expect, plus a broader playbook for the tech sector, is Maribel Lopez, Lopez Research founder. Maribel, good to see you. Thanks for being with us. I want to sort of zero in on a couple stocks, and then we can broaden it out. And let's start with AMD and what we could hear from the company, which has seemed to have been gaining steam in terms of the headlines and the progress that it's been making.
So if you look at what happened with the recent OpenAI deal, I think that really pushed AMD forward in a meaningful way, both in terms of people saying they're a good alternative for some of the NVIDIA product category, but also that there's some standing orders for them moving forward. I think the concern for a company like AMD right now is you place an order or get an order placed with you, but that doesn't mean you're going to see that in this quarter or even the next quarter. We're looking at 2026 or some of that. So it's like, how do we bridge the gap of that revenue between now and 26 is, I think, really what investors are going to be concerned with. It's had a huge rally. It's really benefiting from, the AI boom momentum. They are actually one of the few reasonable competitors to NVIDIA, but I think that just makes expectations very high based on what they can deliver in 2025.
Well, and I was going to say that, the expectations for fundamental performance are one thing, and then there's, of course, the valuation. It's actually valued right now above where NVIDIA is valued. So if you're an investor trying to figure out what to do, what do you do with that information?
Honestly, the market is just extremely frothy right now. It's very difficult to say that the fundamentals really support the valuations that we have today. There's just been a tremendous amount of enthusiasm. Everybody understands that AI is going to change the world in many different ways, and they want in on that. So the buys in many cases have been unrealistic, pushing us to ridiculous highs. However, having said that, we have seen ridiculous demand for compute capacity, and there are only a few companies that are really benefiting from the picks and shovel side of that. That will be NVIDIA, that will be AMD. We had hoped it would be Intel. We're still on a wait and see for that with Intel, and Qualcomm seems to be coming in strong on the other side right now with some new announcements. So there is still a tremendous amount of opportunity, but the enthusiasm has just given us sky high valuation. So it's not that the opportunity isn't there, it's whether or not we can meet what in some cases seems like unrealistic expectations.
Let's zero in on one of the names you just mentioned. That's Qualcomm. And as you alluded to, the company just introduced a data center chip, which has not been its typical offering. It's also trading at a much lower valuation than all those other stocks. The stock is up this year, but only by about 15%. So is that one that people should be looking at as a relative bargain, at least compared with some of the others?
So when I look at the industry fundamentals of Qualcomm, I see that there's some really good opportunity on two ends of the stack. So we have a future edge AI computing game that Qualcomm is square in the zone for. This would be the equivalent of the next generation of mobile at the edge. So there's that market. But then they just introduced this new data center set of chips, which the thing about that we have to think about, that's a timing game. If you've introduced those chips now, you've discussed that with a bunch of different buyers, those still have to be put into the builds. Those builds can be a year or more away at this point now. So the question is, can they accelerate somebody adopting that design? And it's a newer design, so therefore there's some inherent discussion of what's the risk around that. But the opportunity for them, right now, this is an NVIDIA game in the data center for the most part, right? So NVIDIA is the company that you will be taking share from, and there just aren't a lot of alternatives right now. So I think everybody's really interested in making sure that they have viable alternatives. And these are good companies. These aren't, fly-by-night startups that you're worried are going to shut their doors next week and won't be able to support you. So we see a tremendous opportunity for future industry-led growth with NVIDIA. Whether or not that translates into their stock valuation, we're not clear on that yet, but having said that, there's definitely industry opportunity and momentum available for Qualcomm.
So Maribel, we know about the infrastructure play, which is all of these companies that you're talking about. As an investor, if you want to then sort of take the next step to use case, where do you even look right now? Because it still feels early, and I know there's sort of a lot of confusion about where it is going to manifest.
Yeah, where we're seeing actually AI being adopted in the enterprise is what I would call some of the very easy, straight up use cases. Like if you look at the customer service, customer experience market right now, there's a tremendous opportunity to leverage AI to do better experiences, to add AI into those product portfolios. So we're looking at companies like NICE, Five9, ServiceNow, Zendesk, all of these have presence within organizations. They're leveraging that AI. They have an opportunity to either deepen that relationship or have AI incremental revenue add-on at this point. We're also seeing the same thing happening in the networking category. So if you look at all of the people that are in the category of the Ciscos, the Extremes, the Palo Altos, there's definitely opportunity for those style companies because they can prove value when they add ROI with AI to their portfolio. So we're seeing some opportunities there from the enterprise buy, but it's still early days. Most of what we hear about in the enterprise is that, these 90 to 95% failure rates, it's not that dire, but we still need to actually tie AI to a return on investment use case. And the only company that's really been talking a lot about that and doing well with that dialogue right now is Microsoft, because they've had extreme success in their Copilot launches.
So Maribel, there is this need to prove that ROI and prove that success at the same time that you have these frothy valuations. So at a time when there are these concerns about the valuations, where should investors sort of be looking for fault lines, if you will? Like what should we be examining?
So I think this gets back to what we were talking about. If you're not going to be the person providing the infrastructure, then it's, do you actually have a foothold in the organization where you can take AI, put it into your product, and basically create a new category of services? So if you look at companies like Salesforce, they've done a good job of discussing how they can leverage AI to deliver into new markets, not just into the CRM category, but they're talking about in the HR category, right? If you look at someone like SAP, they're actually defending ground, but they're using AI to defend that ground. So the fault lines are basically when you look at somebody building in AI, can you see their customer base actually adding additional money to, say, a subscription service for that? And if you can't, then you can say, well, that's a nice to have, but it's just going to be a cost for them. It's not going to be something that's going to drive future revenue growth for them.
Let's turn now to Qualcomm as its fourth quarter results are just hitting the wire. Let's look at the numbers here. Q4, adjusted EPS, $3. The street was at $2.88, so that's a beat on the bottom line. Looking at the top line, Q4 revenue clocks in at $11.27 billion. The street was closer to $10.77 billion, so that is also a beat. Now let's get to the forecast. Q1 EPS, they're calling for between $3.30 to $3.50. The street was at $3.26. And it looks like Q1 revenue, they're guiding for between 11.8 to 12.6 billion. The street was closer to 11.59 billion. I do see here a full year CapEx guide as well. It looks like they're 1.19 billion. That's a bit higher. It looks like consensus was at 1.18 billion. Just initially here, at least, we're dipping here about 2%. Of course, we track Qualcomm so carefully because it is the largest maker of smartphone processors. Of course, they've been eyeing opportunity in a lot of different markets, PCs, auto, and yes, making their move in that AI data center market as well, taking on NVIDIA. Well, for more on Qualcomm's latest quarter results, let's get to it. We got just the man to walk us through. That would be Futurum CEO Daniel Newman here on set. Daniel, the numbers are just out. At least initially, we saw a dip down about 2%. I'm curious to get your take. What do you make of these results?
Hey, Josh, the numbers came out pretty tidy. What was it? A beat on revenue, beat on earnings, beat on guide. You got to like that. I mean, this is a company that's in transition. They are trying to tell a new story. They've had some really good success in automotive. They've expanded their business into IoT. The core business has been somewhat rate limited, but what I believe they're showing here is that it's stable. They had the Apple revenues falling off over time, and they've had to prove their wares there. But overall, I like the numbers. And by the way, I've been calling this company a dark horse for a while. You've got that data center upside. You've got the automotive business. You've got IoT. Like I said, the core business is stable. I like the company because it trades at like 14, 15 times forward with all that potential. And I think their story is more of a 6 to 8 quarters into the future story.
I want to get to the AI part of the story, but first, just the bread and butter. The company does generate most of its revenue from smartphone chips. So I'm curious, Dan, as you look ahead 2026, you look at that smartphone market, what does it look like? What does device growth look like to you?
Well, I think we've seen to some extent that these numbers continue to sort of grow steadily but slowly. We saw it just last quarter with Apple, the iPhone 17 excitement, all the enthusiasm about that at the top end, which is where Qualcomm really does its best work in those very high-end devices for Samsung and others. That's where we're starting to see growth, and that's where a lot of that AI enthusiasm and excitement exists. And I think Qualcomm's done a good job protecting margins, winning at the high end, and that's where I think they need to win while they're in this process of diversifying. But to your point, most of their revenue, yes, but their diversification is becoming more and more. A mid-double-digit percentage of their business is now diversified away from the smartphone.
Apple switching to in-house modems. If I'm a Qualcomm investor, how should I think about that?
They've been telling this story for years. They've already baked it into the numbers. This company, with their model over the next 3 or 4 years, I spent some time with their CFO today talking a little bit about this, just the reminder of this. They have been very upfront about this, but like I said, look at the number. They're raising above the consensus midpoint. But here's the thing, Josh. They came out, they announced that AI chip.
Yep.
And you saw it just flew, right? Didn't it? It went up to like 20% at some point in that day.
That got investors excited.
It came back down. But the company understands they need to be in physical AI. I think they're going to enter into robotics. I think they're going to, see this IoT number expand. Automotive, $45 billion plus pipeline. AI chips, they only need to win like 1% of market over 4 or 5 years to add $6 or $7 billion we're estimating to their top line.
Do you think, so they make this move into the AI data center market. How successful, Dan, do you think they're going to be in attracting customers, convincing customers, hey, come with us, not NVIDIA, not AMD?
Well, I think part of the problem is that everyone wants to make that comparison. I think there is going to be a market that expands beyond NVIDIA and beyond AMD. I think that that's where companies like Qualcomm have a really great opportunity to shine. I think you have to consider just the inference opportunity. Qualcomm was pretty specific that they plan to specialize in that, they're going to take advantage of a lot of intellectual property. They're known for like low power, efficient at the edge. They're going to bring that to the data center. They won Humane. That was the company they announced 200 megawatt deal. It's a start. I think they'll win 1 or 2 more hyperscale customers.
You think a few more big cloud giants?
Yeah, they may not be massive deals. They may win small deals, get into the door. But like I said, if you look at a TAM, and these numbers, Josh, you keep hearing different numbers. We had a $583 billion number last quarter. We expect to raise that number again by 2029. And if they win 1, 2, 3%, you're talking $5 to $15 billion of incremental to Qualcomm. That's a quarter of revenue potentially being added that could take the company and, by the way, push that multiple, that 13, 14 forward that they've been getting for the longest time. If they even got to 20, that's a lot of upside for an investor.
It is great to see you. So let's start with those results, Cristiano, because they were strong. We saw a strong forecast. You beat top and bottom line on estimates. I'm sure it must be a bit frustrating, Cristiano, to see the reaction in the stock. I did see some folks saying perhaps that was just elevated expectations, Cristiano, heading into the print. But walk us through the report. What did you make of it and what are you seeing in the business?
Look, great to talk to both of you. We're very excited. We're very happy with the results. It shows the company has been executing well on its strategy and shows the earning potential of our technology roadmap. And it was not only great results for the quarter, ahead of expectations, also a strong guide, but also great results for the year. We've shown that the company now is growing at 18% year over year on non-Apple related revenues. And it shows the diversification strategy of the company really playing out well with much increased revenues and growth rates in automotive. In the other industries, we had record year in fiscal 25 for semiconductor business. And now our automotive business is now in excess of $1 billion per quarter, 1.1. So nothing to complain about it. We're happy about it. We continue to ignore, I think, the short-term noise and executing on our strategy.
Cristiano, as you said, you all talked about your non-Apple revenue really pushing forward. I saw some analysts commenting on that. They were enthusiastic about that you've really showed this diversification plan that you've been pushing towards now for years is bearing fruit. The next frontier for you guys, which you just announced recently, was getting into the data center, that is the next frontier you're going to be pushing into. And in fact, the stock was running up ahead of the earnings after that announcement. What more can you tell us about those chips, what the demand is like, how many you plan to produce, what you expect sales to be like? What can you tell us?
Yeah, frankly, we had great news on the earnings call about this. What we said is, if you remember, in addition to everything that the company is doing, and we're building very strong product platforms with technology leadership, whether it's PC or auto, personal AI, industrial, broadband, all of those new industries, we also created optionality for the company by expanding into data centers. We believe that data center is, as you all know, it's a massive opportunity. And now, as you go from training to inferencing, people are looking for competition, and we have ability to do something very interesting. What we did in the earnings call, we actually accelerated that forward. When we said about 1 quarter ago that we were in the data center business, we said revenues will start becoming material in fiscal 28. Actually, because of the traction we got with our AI accelerators, we pulled that in and we said now it's in fiscal 27. We're excited. We have a disruptive, I think, technology for inferencing, especially at a time that power consumption could be a limiting factor in the growth of data centers. This is our company DNA. We do high performance, low power, and we're excited. There's a lot of curiosity about the Qualcomm products. I'll tell you, there's a lot of curiosity from analysts, a lot of curiosity from the press, but even more curiosity about the hyperscalers. And we're going to have an update in the beginning of next year and talk about that in detail. But it's an exciting part of Qualcomm future.
Yeah, we're definitely interested in it. And as you said, customers are interested in it. Potential customers are interested in it. Cristiano, who are some of those potential customers? If not specifically, you mentioned hyperscalers. Can you give us any kind of more color around that? And you said these chips are designed more for inference rather than the training phase. Does that also mean that you'll be able to be competitive on price, for example, with some of the chip producers already in that market?
Look, a lot to unpack here. So we're playing the data center in two areas. CPU, I think we have a very competitive CPU. I think we prove it as we take it into all different industries. It's probably the fastest CPU design out there with the most efficient power consumption. And we're looking at CPU for head nodes of AI inferencing cluster as well as general purpose CPU. For the CPU business, we've been engaged with a hyperscaler last quarter in an advanced state of discussions. You can imagine it's one of the big cloud companies out there. We're very pleased with the outcome of that conversation, and we're going to have more details on our update in the first half 26. The other part of our data center play is inferencing. And we're building an architecture which is different than a GPU. I think it's probably where the data center is going to go and the post GPU. When you think about dedicated data center for inference, he has higher computer density and he has a lower power consumption, and it reduces the total cost of operation. And I think that's very logical. The market's looking for competition. The market is so big, we don't have to get a lot. If we just get, a portion of the market, that could represent multiple billions of dollars in the next couple of years. And we're just doing what we do always. We just focus on technology and executing on our plans.
Cristiano, as we talk about AI, and you've heard this debate, right? Whether it's a boom or a bubble, and some smart folks, Cristiano, very well-known investors, some of them have been throwing, some yellow caution flags here, and I'm just curious to get your take on that debate.
Well, first of all, for us, we're immune to all of this because data center is going to be a new thing for Qualcomm. It's all upside. So for us, it's all opportunity, no risk. Now, having said that, I was asked this question before, and when you look at the bigger picture, there is need for more compute, and AI is going to be how computers are going to be built, and how software is going to be built. And you're going to need a lot of computing power. And that's not unique to data center. You're going to need computing everywhere. We've seen that in our phone business, in our PC business, in our auto business. You're going to need more compute. You continue to need processors are going to be faster. They're going to be driving AI. That's true for the data center. What often happens in technology, there's the trend and there's timing. And timing, it's really hard to predict. It takes an ecosystem time to develop applications. I go back to what I said before. If you go back to 1999 and you imagine the internet, I can tell you right now, for sure, the internet today is way bigger than people thought it would be in 1999. And it took a long time to get there. I think AI is probably underestimated in the long run. In the short run, we'll see what happens. But here's the important thing, and that's why it's relevant for us. Everybody's playing to win. Everybody's building those massive data center to win, but they're going to compete, and there's going to be competition. When there's competition, efficiency matters, and I think that's our opportunity to participate in this space.
And my other question about all of this, Cristiano, is when you talk about the internet and that it is bigger, it also developed in really unexpected ways over time, right? I think that in 1999, if you had told me what Uber was and how smartphones were going to develop using applications, it would have been very difficult to predict. But given that you've been in this industry now for a while, that you saw that cycle, I'm curious what you do expect. Like, we don't quite know yet what the really killer app or what the really game-changing, life-changing element of all of this is going to be. What would be your best guess?
Look, some of those things are already happening right now. I'm actually very excited about this. I know we spend a lot of time talking about a data center, but there's a lot of exciting things happening in mobile and in the edge. For example, you mentioned the transition to smartphones and how smartphones change everything. And it was interesting when we first designed 4G, there was broadband, and we said, you're going to have a computer in the palm of our hand. People said, nobody wants this. I just need my BlackBerry to do email. And it was a little different. So we're starting to see those things right now. As AI understands everything we say, everything we see, everything we hear, and is now changing the human-computer interface, that is starting to create a new category of devices, which are personal AI devices. And that's materializing in things that we wear. We wear glasses, we wear rings and watches. So we started to see what used to be wearables, like a smart glass that extend the functionality of your camera, becoming a new computer. And that one, we starting to see actual real scale. For example, when we had an investor day, when we talk about $22 billion of Qualcomm revenue, non-handsets, we said in that $22 billion, there are $2 billion of smart glasses. We're significant ahead of that schedule. I think if you look at Meta glasses, that's on fire. The demand is very, very high. We're going to see other glasses at over 30 designs, and we're starting to see agents, AI agents. As AI gets created in the data center, they're basically developing into applications in those type of devices. We're also going to see that happening in industrial. We're going to see that happen in PCs, when you're going to be able to run full models in AI PCs, and of course, the change of the phone. So the industry is moving forward. Sometimes it doesn't happen in the way people imagine. You don't know yet what the winners are. It's like we didn't know what the winners were in the days of the internet. Who will be the winner of search and social and maps? Everything changed. And I think we're going to see that with AI. But it's exciting opportunity for semi and exciting opportunity for Qualcomm.
AMD trading lower along with most of the semi-complex. And more broadly here, it has been a pattern that we've seen throughout this earnings season. Tech companies beating estimates, even raising their forecasts, and the stock falls. We're seeing it again this morning with Qualcomm. So let's dig into what that reflects about the AI trade and where investors should be positioned right now. Joining me, Ivana Dilevska, Sphere Invest founder and CIO, and Sylvia Jablonski, Defiance ETF's CEO and CIO. Ivana, I want to start with you on this Qualcomm example specifically because, again, we've been seeing this playbook sort of throughout earnings season. Here, it looked like Qualcomm had a pretty good quarter and the stock is falling. So what gives here? What's your perspective?
So Sylvia, what we've seen this earnings season is that it's all about positioning. So it's really not so much about what the companies are reporting, but more about how investors were positioned going in. Specifically to Qualcomm, they announced a new data center chip few weeks ago, so the stock was up on that going into the earnings. They didn't quite provide any additional detail on the earnings. They said that more details will be coming next year, and this is why you're not seeing an outsized positive reaction to the beat.
Sylvia, what do you think sort of more broadly here? Because it's not unusual to see this. We've seen it throughout earnings season where the numbers initially look okay, but then the stock's been falling. Does this just reflect this sort of underlying wariness about the valuation question?
Hi, Julie. I think it's a great question, and it's really a great point, right? Because earnings seasons have arguably been coming in, fantastically. Even the companies that perhaps didn't meet analyst expectations have done quite well. We're having 80% beats on the top and the bottom line. My take on this is that expectations are so high. There's a lot of talk about overvaluation, and essentially any little, deviation from the perfect report, I think is at this point going to set investors to perhaps take some gains in their positions or reduce because they're worried about this overvaluation problem and where we are. But what I would say is, when the market's rallying and these stocks are at all-time highs, which has been, every other day over the last couple of weeks, right? we hear a lot of investors saying, I have a lot of FOMO because I couldn't get in, right? And so here are the dips. And if you think AI is going to stick around and you think these companies like Qualcomm, Broadcom, Supermicro Computers, AMD, NVIDIA are going to be part of AI and the build out in AI infrastructure, it's worth considering looking at these names now.
What do you think, Ivana? Do you think the sort of buying the dip approach is the way to go when you see these kinds of sell-offs?
Absolutely, Julie. And to Sylvia's point, I think we do see people overbuying the stocks, but if you look at the valuations, they're not necessarily high. And this is because we're seeing the beats. So, right, each time a company beats expectations, the multiple, if the stock doesn't positively react, the multiple goes down. So this is why the dips are really good buying opportunities, because you're not really chasing a higher multiple.
I mean, to some extent then, Ivana, I'll put this one to you first. To some extent then, do the actual details of the earnings become less important in a way? If you're buying into this whole AI thesis, and you think that a broad swath of companies is going to benefit, like how much does the quarter by quarter matter?
So quarter by quarter doesn't necessarily matter, and the earnings reactions don't matter, but the numbers are very important in the long term, right? Or even on a few quarter basis. So if the companies are not consistently beating, it's gonna be almost impossible for the stocks to keep going up, right? So you really need the numbers. Now, whether they beat expectations by more or less than the buy side expected, that's gonna determine the quarter reaction. But whether they're gonna be up into next year, it's really gonna depend on how much did they beat by on several quarter basis.
Well, I want to bring up another example here with you, Sylvia, and that's Supermicro, which you mentioned. The company reported earlier this week the stock did fall, and there, it's not just about beat or miss, right? It's about, do you see that long-term path for growth? What did these Supermicro numbers tell us, especially given the fact that they recently sort of warned, and are there any concerns there?
Well, and to piggyback off of what Ivana said, I think it's a great point to make, right? The numbers do matter because we need to justify these multiples in order to get people to want to buy them. And I think, and then, dips in that case are good if the news is good. So with Supermicro, they came out and said that there were some design issues here. If you look at the overall global sales for the semiconductor industry, it's about a quarter-over-quarter growth of 15.8%. And, this company was kind of down 15% quarter-over-quarter on their side. So I think investors, though, because it has fallen quite a bit, this is a stock that has been a performer over the last few years, and they are a pure AI play. They are a company that's arguably, going to have some leadership opportunities in data centers and edge computing and 5G, in the general AI build out. And so I think that they're kind of in the right spot, right? So it just depends on what happens now with these designed and customizable chips, what kind of opportunities they get. But historically, it has worked with this stock to buy on the dip. That being said, again, to Ivana's point, the numbers do matter, right? So with the other companies that are falling, the numbers are there. So with this, we're gonna have to wait and see.
And something else that is sort of out there in the ether, another story that was reported today, has to do with M&A. And so I'm curious to ask both of your perspective on this. It's the story that Bloomberg is reporting that SoftBank had looked at Marvell technology, possibly to buy it and combine it with ARM. And Ivana, I know that Marvell's one in your portfolio, so what do you make of that story? And do you expect more consolidation to happen?
Well, Marvell has been specifically very undervalued here because they did not out-deliver on the 2 prior quarters that they reported. And with expectations being high for the AI trade, the stock has really not performed well this year, especially compared to peers. So I think it makes total sense that SoftBank would be looking at buying it here. I think long term, it's a very strong story. They're levered to Amazon. And Amazon also themselves struggled a little bit to get Trainium up and running. Now it seems like it's doing much better. So I think the fundamentals for the rest of the companies that are exposed to Amazon are getting much stronger into 26. So the fundamentals for Marvell are pretty solid.
Interesting. Okay, so whether it's a deal, whether it's things inflecting a little bit better for Amazon, Sylvia, kind of what's the next catalyst now for growth? I mean, we've got NVIDIA coming up on November 19th reporting its numbers. I guess you could debate whether that's going to be a positive or negative catalyst given some of the reactions we've been seeing. But is that the next thing you're looking to? What's sort of the next thing now?
I mean, in terms of we need the quarterly earnings calls, we need to hear what they're doing. We need to hear, particularly from Jensen Huang, because he is essentially the poster child for AI, or the stock is at least. Very much the bellwether and the market driver really this year. So it does matter. But that being said, I'm looking at, AI. The AI trade has worked incredibly well for investors in most semiconductor positions. I'm just trying to think about where is the puck going. And I think that now we're starting to have to look at the second and third derivatives of AI to really find these, kind of hyper growth opportunities potentially that can exist. And I think that looking at AI infrastructure, the energy, the AI powered infrastructure play behind just the chips and the whole, movement, it will be an interesting place for investors. Like you just look at these energy companies, you mentioned it at the start of the segment, they're doing quite well. And I think a lot of that is because they are powering this phenomenon here. So I'll be looking at AI powered infrastructure.
And what about you, Ivana?
I think that's spot on. Basically, we are ahead of the next wave of investments in AI, and it's specifically targeting the infrastructure side, so both physical infrastructure and software infrastructure. So I think there is a lot of opportunities on the networking side and a lot of opportunities on the power generation side.
All right, ladies, thank you both for being here. Appreciate it, Ivana. Sylvia?
Thanks, Julie.
Thanks.
Well, AMD's third quarter results, they are just hitting the wire right now. Let's take a look at those numbers. Q3 adjusted EPS 120. The street is at 117, so that's a beat. Q3 revenue, let's look at the top line, $9.25 billion. The estimate was $8.74 billion, so that's also a beat. I'm just looking for the operating margins. Here they are. Q3 adjusted operating margins, 24%. Consensus was at 24.8%. Now let's get to the forecast. Q4 revenue. AMD is guiding for between 9.3 and 9.9 billion. The street was at 9.21 billion. And in terms of their gross margin guidance, they say to look for about 54.5%. That's smack in line with consensus. At least initially here, the after hours, we don't see a ton of movement. Of course, remember, this stock had simply a remarkable move heading into this print. It was up about 50% just over the past month. That was, news of kind of the deals that AMD had been announcing with the likes of OpenAI and Oracle, and investors had clearly gotten very excited about what some of those deals meant for AMD looking ahead, both financially and strategically. Of course, we're also going to want a lot more color about the PC market, about the traditional server market, about how AMD is thinking about that China AI business looking ahead, if there will be a business. All of that will be in focus on the call.
Yeah, I mean, look, AMD beat on the top and bottom line. They beat on data center revenue. They beat on client revenue. They beat on gaming revenue. So they beat across the board. They even beat on fourth quarter guidance. But the big deal here is it just wasn't enough. I think that Wall Street had lofty expectations already. The stock price has already soared far higher than a lot of people, I think, expected. And then when they came in with the results this quarter, it just didn't make people as excited as they wanted to be. It's kind of that, beat and raise. Okay, well, beat and raise even better than you did last time. And so that's probably what's going on here. It seems as though the company's going to continue to do well when it comes to the AI race. Don't forget the deals that they announced with OpenAI and Oracle, those don't hit the books until later. That's with their next generation GPUs. And so then we'll start to see from that. But perhaps people were expecting that revenue to hit now. I don't see why they would, because the deals were only just announced last month. And so it wouldn't necessarily be on this quarter guidance or the prior quarter guidance. So, when you look at a stock like this, you think of kind of what's happened to NVIDIA in the past, not obviously saying that AMD and NVIDIA are comparable as far as market cap or, total market share. But it's the idea that, okay, well, you've scored these huge deals, you've performed well, perform better for me, and then we'll talk.
AMD reports the stock is slipping here about 2.5%, at least initially in the after hours. Of course, Cody, the stock had just a remarkable move heading into the print. But I'm curious, Cody, just to get your first take on these results.
No, I think, Josh, they're really strong numbers across the board. $500 million upside in revenue, decent EPS beat, $400 million guide. And it's really, it's largely on the strength of their gaming and client business. Gaming was up 181% annually. That's on the refresh of the Sony and Microsoft game systems. Clients up only 50% annually, but servers are up another 22%. So they're continuing to take share from Intel in the server market. But overall, I thought it was a strong number.
Cody, I mentioned the move the stock had into the print. It was up around, Cody, 50% over the past month. And you could chalk that up, I think, to AMD making these really headline-making deals, right, with big names, with OpenAI and with Oracle. And I'm just curious, Cody, when you were talking to your clients about those deals, how are you walking them through it? What it means for AMD long-term, financially and strategically?
Long term, I think it's extremely positive. You've got Oracle, you've got OpenAI that's now coming to the table there. The big concern had been whether or not AMD could become a real alternative to NVIDIA's AI accelerators. And I think with these new agreements with Oracle and OpenAI, you're starting to see the market's answer to that. And I think that with the new rollout of their new systems, their new MI400 platform, their new Helios rack scale system. This all comes out in 26, and this is AMD's real answer to NVIDIA's NVL platform that leads the market today. And so this will be the first opportunity we really get to see AMD compete head-to-head with NVIDIA, but the market's already answering that with customers already starting to line up.
One question, Cody, I have is about, and listen, it's a question for AMD, but also NVIDIA and others, is this company's China AI business, what that looks like ahead. Cody, is there even going to be a business?
Well, Josh, the China business was excluded from this quarter and from its guidance, as NVIDIA is doing as well. So prudently, given the uncertainties with the China market, that's being taken off the table for now. I think it's superfluous at this point. I think it's incremental. If it comes, it's not needed, if not necessary. If Trump and China cannot come to terms, then but it is upside if it does happen. I think in the end we'll get some sales of AI accelerators into China. The demand is just too large, and our leadership is too large, so that the demand for these service providers in China is going to be there with their AI aspirations. But in what form and what timing that's going to be, it's still on the table, and so we'll just have to see how that shakes out.
I wonder, Cody, and feel free to correct me if maybe this is too simple, but I wonder if some investors think, you know what, I just heard from big tech. They all just reported results. And there's no sign here that they're slowing their AI investment. Not Meta, not Microsoft or Amazon or Alphabet. If that's true, Cody, then do I just stick with NVIDIA? Do I just stick with AMD? Or would you say, no, that's too simplistic?
I think it's too simplistic to stick just with NVIDIA because there are a lot of other alternatives, and AMD being the largest among them. And so I do think that there are reasons to be involved here with AMD. I think they're, like I said, the primary alternative, and they are going to get the benefit of that incremental growth as it's new upside business. Now they've lived and they've benefited from their leadership against Intel, years of taking share, years of work that they've done to gain that leadership. But now the incremental upside is going to be gains against NVIDIA, and I think that's yet to come.
Finally, Cody, you look at AMD, you just look at this chart. There are questions naturally going to be about valuation. You still believe valuation attractive here for Lisa Su's company?
I do. I think the more that they can demonstrate they're a good alternative to NVIDIA in AI, and as long as we have the AI tailwinds, as long as CapEx budgets continue to grow, as long as spending and usage is continuing to find attractive homes, then I think that demand for AMD solutions is going to be there. It drives not only a solid growth in their AI accelerator business, but also their core central processing business for data centers. You need these to run the back office applications, to run the head office and the orchestration of all of this data center management that has to happen. And so you can't just build out an AI data center. It has to run on these CPUs and increasingly their AMD CPUs.
Cody, appreciate that instant analysis, sir. Thank you.
Thanks, Josh.
ARM just crossed the wire. Let's get right to Yahoo Finance tech editor. That would be Dan Howley in the newsroom with the results. Dan.
Yeah, Josh, we have earnings per share of 39 cents. That beats on estimates of 33 cents a share. And revenue came in at $1.14 billion. That also beats with versus $1.06 billion. They also beat on the Q3 outlook. So originally the estimate was for $1.11 billion. ARM says that Q3 revenue will be $1.18 to $1.28 billion, and now we're seeing shares rip higher. They're up, well, they were up about 5%, but now they're coming back down to earth, less than 1%. Obviously, ARM huge because they provide the designs for everything from chips that go into the iPhone to, Qualcomm, which you guys were just discussing, and all over the place. NVIDIA, they use ARM chips or ARM designs for their chips as well. So a huge indicator of where the chip industry is going. They make all their money from licenses and royalties.
All right, thank you, Dan. Bullish forecast versus expectations. What do you make of that print?
Are we not happy as tech people that pretty much we're beating every number? I mean, I know yesterday was Armageddon and it was the end of the world for AI. This is just another breadcrumb. I mean, first of all, company that provides the CPU technology to every Blackwell. We heard last week Jensen Huang at GTC, you and I talked about it, $500 billion of visibility by the end of next year. Their royalty numbers are through the roof. I spent some time talking to Renee Haas. The words I'm hearing are things like insatiable demand, unprecedented demand. And by the way, I've had conversations, another company printed today, Coherent. I mean, they're in the business with the materials, transceivers for AI. Everything around AI, Josh, has unbelievable demand. ARM is one of those companies that has an entree coming. They've sort of laid these breadcrumbs. They're going to get into AI chips. They've gotten into these custom and subsystem designs now. That's shot their margins up. I mean, this company's almost twice the size that it was when it went public. And they haven't really even fully gotten into AI yet. You've got to like the fact that everything in AI and everything in tech has performed so well this quarter, and ARM is just another one that is coming along and doing really, really well as this tech boom continues.
Who is their big, what would be the competitive risk for ARM? Would it be is it that RISC-V chip architecture, Dan? Is that it?
Well, of course, as ARM gets into more things, right? As ARM decides to say, are we going to start doing more, going down that path of designing, helping with AI chips? We know there was a little tension with NVIDIA that came out after some of those announcements had broken. NVIDIA starting to partner with, potentially they did the deal with Intel. All those things could create some level of risk for ARM. But I think ARM is so deeply embedded in so many markets. Remember, they're in data center. They're in edge and IoT. They're in all the lightweight sensing devices for consumer IoT and wearable devices. They have that partnership with Meta with their smart glasses. They're in everything. So they're so deeply embedded. But like everything, like the rise of ARM itself, there's always the next thing to rise. And of course, you mentioned RISC-V. That's one of the technologies that's, of course, being looked at as a possible competitor in time. But that'll take some time to develop.
You think about ARM, I mean, the instinct is obviously think smartphones, but they've been making these moves into PC, into data center. How much success, how much traction have they been having in those efforts, Dan?
Well, data center is a great example. They've partnered with Google, the Axion chip, the custom chip that Google's using. That's all ARM. I believe the numbers around Amazon for AWS Graviton came out something around 50% now of all of AWS of their workloads now are on Graviton, which are ARM-based instances. We've seen it in PCs. We've seen that pivot to ARM. We know Apple uses a ton of ARM architecture. So you're seeing it in data center. You're seeing it on PCs. You're seeing it on devices. It's really found its way into every part of the market. So it's very interesting if ARM gets deeper into AI, how much that could drive their TAM up. And you're seeing it with Qualcomm. You're seeing it with ARM. They all see this opportunity, and this TAM is getting to be so large that winning even very small amounts of the market gives these companies huge opportunities. You're talking about a $5 billion a year company in ARM. AI could take it easily to having 10, even if it just wins the smallest share.